Hello traders, Gary Wagner here at just about 1:45 in Honolulu, 6:45 in New York. It is Thursday, March 26th, 2020, and this is the daily report for gold and silver. Although gold closed very close to its open, creating a doji, it did have quite a range in terms of the low side, 1611, and the high side went up to, I believe, 1671. Nonetheless, we had a shocker of a jobs unemployment claim today that came in at 3.2 million new applicants. While we were expecting that number to really shoot up because of the coronavirus epidemic, we did not expect that it would grow by that kind of leaps and bounds. On today's show, we'll take a look at what we believe will be the next move in gold, whether it's going up or down, and talk about some strategies that we want to put into play. We did pull profits on our trade yesterday, and we'll talk about that in detail when we look at the price board. Let's go ahead and do that now. A very interesting day in the precious metals markets. In fact, the exact opposite of what we saw yesterday, where platinum, palladium, and silver were trading higher and gold traded lower on the day. The opposite is true today. Both spot, physical, as well as gold futures are higher, and platinum, palladium, silver are down. Dow Jones Industrial Average did close higher on the day by about 1,300 points. And all of this came in light of a jobless claims report this week that went up by 3.2 million people have applied for unemployment. That's interesting. First, to gold, $1639.50, up $6.10. The high, $1672.50. The low, $611. So we close right in the middle, but it is that low that is important, because I did raise our stops yesterday to 613, which means we were effectively stopped out, but stopped out with a very decent profit. I'll put that up on the screen now. When we look at spot or physical gold, that's still trading far below futures pricing at $1629.20, but that was up $14.40. Platinum today was down a little over 1% at $736.80. Palladium was down about 0.5% at $2234.90, and silver was down about 1.25% at $1461. But the really big news was the dollar fall, down a full 1.5%, call it, and back below 100. Let's take a look at our current technical studies. The first chart that we do want to look at today is a daily candlestick chart of the US dollar index. As you can see, it has fallen from grace when we consider that just a few days ago it was trading above 103. That is this candle right here. Here's our hangman just prior to that. We've had now 3 consecutive days of lower pricing, now once again below that key level of 100 that comes in right here. The actual drawdown was about 1.5%. And in terms of how that affected the markets, I've just put up the Kitco Gold Index. Now, there is a disparity between futures pricing and spot pricing. However, I think this illustrates it well. The screen print we are looking at is from the Kitco Gold Index and was taken at approximately 5 o'clock Eastern Standard Time. At that time, gold was trading up, spot gold, $11 per ounce. But on closer inspection, you'll see that it actually gained $25.30 due to the weak U.S. dollar, but sellers brought it down $14.30, which is why we only had a net change of $11. The same thing is true for the futures market, because we had a 1.5% drop in the dollar index today. I've just put up a daily candlestick chart, this of gold futures. We are now in the afternoon session, as I say, meaning the morning in Australia. It is marking it down $11.80 at $1,639. While I'm still overall extremely bullish on gold, I do believe that we could see the market dip a little bit and give us another opportunity to enter the market from the long side. I certainly would not be a short seller here. So for right now, my recommendation is we pulled profits. We're sitting on the sidelines after making $4,200 per contract, and we will await to see whether or not this market holds this particular area or makes a play back down to 1600. While we will watch this market very closely, one suggestion would be to put a limit order to buy gold at 1607 or better. Now, if we see the market actually break to the upside, as you know, I have no fear about buying a breakout. But for right now, we're going to stand on the sidelines. You can put a limit order in to buy at the price I just mentioned, but we will remain flat until it either hits down in that area, 1607, or we get a solid break above 4330, and that, of course, is the 23% Fibonacci retracement level. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the daily update and weekend review. Bye-bye.